Todd, let me ask you about volatilities too. Low volatility ETFs, SPLV is the Invesco low volatility one. They invest in financials, consumer staples, telecom. You got Coca-Cola, you got Berkshire, and these things. What I find interesting is investors don't seem terribly impressed, though. I don't see big flows in consumer staples. I don't see big flows into SPLV this year. I'm wondering, I mean, I know it's certainly rational to say flows follow prices, but when is that going to turn around? When are we going to see real flows, not just price changes?
Well, you're right. So SPLV has hit another high recently. It's actually performing almost in line with the broader S&P 500 with SPY and IVV and VU this year. But you're also right, we haven't seen the flows. SPLV and the iShares product, USMV, that's the minimum volatility ETF, have not been that popular this year. We've actually seen more money going into quality-oriented ETFs. So Invesco's SPHQ, iShares, QUAL, we've seen free cash flow ETFs, Victory Shares, VFlow, see strong demand in the month of August. So we think investors are going to sense the volatility that we've seen in September and then start to rotate in if this volatility continues September and October like it traditionally does.
I'm looking at year to date, where we are, ETF assets, flows into equity, flows into fixed income, non-traditional is getting some inflows, active is getting some more inflows. It's really remarkable. It's really kind of incredible. Like low volatility, high volatility, you're still getting inflows no matter what happens, essentially.
Yeah, I mean, well, there's investors that are buying ETFs for strategic reasons, and Vanguard 500 ETF already has set a record for the calendar year, and we have 4 months to go in terms of its overall net inflows this year. But we are starting to see some of the other sectors participate from a flow standpoint, real estate being one of them. We've seen real estate XLRE, which is a real estate select sector spider ETF, VNQ, which is the Vanguard real estate ETF. Those saw net inflows thus far, or in the past month. So we are seeing some of those more defensive sectors that are performing relatively well since the beginning of the third quarter start to see investor
So
demand.
this gets to that question of does flows follow prices? Because we've seen interest rate sensitive sectors, utilities and real estate, for example, outperform recently, which makes some sense. And I know inflows like in real estate have improved a little bit, but assets under management are still pretty modest in some of these smaller sectors, essentially. Will they see inflows? Will we start seeing more significant inflows as investors take profits in tech and maybe broaden out into other sectors?
I think it's more likely that if we see a sell-off, that those defensive sector ETFs get bid up, as opposed to people using them to outperform, but more to reduce the risk profile. We've also seen the more risk mitigating strategies, the defined outcome products, the ones that have structured protection, Calamos, Innovator ETFs, you guys have those products as well that have come. That's starting to gain traction, and people are not going and building their own sector defensive strategies the way they might have beforehand.